Thinking Byzantine here, and today we'll be going over the 3-fund portfolio. Now, for a quick disclaimer, I am not a financial advisor, and this is all just my opinion. Now, the 3-fund portfolio is basically a type of lazy portfolio, and a lazy portfolio is a portfolio designed to do well under most circumstances. It uses funds that are being rebalanced, so there's little to no maintenance on the part of the investor. Now for this portfolio, I use VTTSX, or the Vanguard Total International Stock Index, BBMFX, which is the Vanguard Total Bond Market Index, and VTSMX, the Vanguard Total Stock Market Index. Now these are all mutual funds, and this portfolio here can be recreated using ETFs. You can use VIXes for international stock exposure, BND for the total bond market, and VTI for the total US market. Now with that out of the way, let's look at this graph. So we compared this portfolio over around a 23-year period from 1996 all the way till now, and we can see that just getting a Vanguard 500 index beats this portfolio by quite a margin. And year over year, you're expected to get around 7%, while with the Vanguard S&P 500 index, you're getting around 9% over this time period. What you sacrifice in upside, though, you get with little protection, in that the worst year for this portfolio that I created was only down 35% compared to the S&P 500, which was down 37%. So you get a bit of downside protection when you make this type of portfolio. And if you look here at the annual returns, you'll see that in 2008, when these two portfolios were hit the hardest in terms of percentages, the portfolio 1, or the portfolio I created, had less downside than a regular S&P 500 index. But like I said, you're trading upside because the US market has been doing great these last 10 years, and you're getting less exposure than just going full 100% S&P 500 rather than just this portfolio. But there's a bit less downside risk, and that's basically the idea of this portfolio. You're trying to minimize risk while trying to get some stable, steady growth year over year. And we can see that even though over this longer time period, Portfolio 1 at some point has outperformed S&P 500, such as in this little time period right here between 2009 and 2010. And I would have to say that's probably because the Vanguard Total International Stock Index outperformed S&P 500 in this year, in those years. But in any case, what are your guys' thoughts on the 3-fund portfolio? And what other types of strategies do you want me to go over next? This is Thinking Byzantine, and have a good day.